Big news just dropped for October 2025. Millions of Americans could see a major boost in their Social Security payments. And yes, it could hit your account this month. Here's the deal. A new payment adjustment has just been approved, giving qualifying seniors and disability recipients up to $2,000 extra in benefits. But not everyone will get it. So how do you know if you qualify? It all comes down to your income level, your benefit type, and whether you've already received this year's COLA Boost payments start rolling out tomorrow. And if your direct deposit date falls within the next week, you could see that bonus land in your account sooner than you think. Don't scroll just yet. Check your eligibility right now before the deadline passes. This update could put thousands back in your pocket. But the big question is, do you qualify? In today's video, we'll break down all the details about this new raise, explain how the $2,600 increases will be applied, and help you understand the requirements for qualifying. Let's get into it. Let's start with the headline. President Trump makes an announcement. SNAP benefits suspended for SSI and SSDI. President Trump has just made a dramatic announcement that is sure to send shockwaves through the nation. In a move that will directly affect millions of Americans, the president has signed an executive order suspending SNAP benefits for SSI, Supplemental Security Income, and SSDI, Social Security Disability Insurance, recipients. This decision is poised to impact a vulnerable group of Americans, many of whom depend on these benefits to survive. Today, we're going to break down what this means for you, your family, and the future of government assistance. How will this executive order affect the millions of low-income seniors and disabled individuals who rely on SNAP to purchase food? What are the political implications of this decision? Stay with us as we dive into this crucial topic and what it means for American citizens who are already facing tough times. Let's start with the good news. How much exactly are we talking about? The month of October 2025 has arrived, and for millions of Americans, it brings a financial development that many have been waiting for all year. The annual cost of living adjustment, commonly referred to as COLA, has officially taken effect. This adjustment increases Social Security payments to help recipients keep up with rising costs. It's not an extra stimulus, and it's not a special bonus payment. It is a scheduled adjustment that occurs once a year based on inflation data. The purpose of COLA is to ensure that benefits maintain their value as the cost of everyday essentials like food, housing, utilities, and healthcare continues to rise. This year's COLA increase is particularly important because inflation remains higher than average. While inflation has eased slightly compared to its peak in previous years, the cost of living has not gone down, which means that seniors, people with disabilities, veterans, and low-income individuals relying on supplemental security income still face financial pressure. The adjustment is meant to give these beneficiaries a better chance to meet their essential needs without falling further behind. Not everyone will receive the exact same increase in dollar terms. The percentage of the COLA increase is the same for all eligible recipients, but the actual amount depends on a person's current monthly benefit. Someone who receives a higher benefit will see a larger dollar increase, while someone with a lower benefit will see a smaller one. For example, if a person receives $1,800 a month, a 3.2% increase would amount to an additional $57.60. If someone receives $1,200 a month, their increase would be around $38.40. The percentage is the same, but the dollar figure is tied to the original benefit amount. For retirees, the adjustment is applied automatically. No action is required to receive the new amount. The Social Security Administration calculates the new payment based on each person's record and adjusts their monthly benefit accordingly. The increased amount will start appearing in payments issued after the effective date in October. For most beneficiaries, this happens automatically, but it's still a good idea to check the updated payment information through official Social Security channels to make sure everything is correct. For individuals receiving disability benefits through Social Security, disability insurance, the same COLA increase applies. However, people who also have deductions, such as Medicare Part B premiums, may notice that their net increase is slightly lower. If Medicare premiums rise at the same time, a portion of the COLA increase may be used to cover those costs. Even so, the gross benefit amount still goes up, and the adjustment is reflected on benefit statements. For supplemental security income recipients, this increase can make a meaningful difference in their monthly budgets. SSI recipients typically have lower benefit amounts, so even a modest increase can help cover daily essentials. These payments are also adjusted automatically. Recipients do not need to file any additional paperwork to receive the higher amount. The new amount typically appears in their October payment, depending on their specific schedule. Veterans who receive VA benefits often see a similar cost of living adjustment because VA benefits typically mirror Social Security COLA increases. The alignment helps ensure that veterans are not left behind when inflation rises. The adjustment is not technically part of Social Security, but the percentage change is usually the same or very close. Veterans should receive information from the Department of Veterans Affairs about their new payment amounts once the COLA goes into effect. It's important to understand that COLA adjustments do not arrive as lump sum payments. They are built into regular monthly benefits. There are no separate or extra checks for this raise. The payment simply becomes larger starting with the October benefit cycle. Many people misunderstand this and expect a separate deposit, but the increase is part of the regular monthly check or direct deposit. One of the key factors determining when someone sees the updated payment is their payment schedule. Social Security uses a staggered payment system. SSI recipients typically receive their payments at the beginning of the month. People receiving Social Security based on their retirement or disability status receive payments on different Wednesdays of the month depending on their birth date. This means some people may see the new amount earlier, while others may see it a bit later, but the increase applies to everyone who is eligible. Checking the updated payment amount is simple. Every beneficiary can log into their official Social Security online account to view their benefit information. The benefit verification letter, which is available digitally or by mail, shows both the old and the new payment amount. This is the most reliable way to confirm the updated figures. Those who don't use online services can also wait for their mailed statement, but that may take longer. For individuals who are newly approved for benefits, timing can affect when the COLA increase applies. If benefits begin after the effective date, the adjustment will be built into their initial payments. If benefits begin later, the adjustment may appear in the following cycle. This is why understanding eligibility timing is important. In some cases, payments may be delayed or temporarily held if there are issues with personal information, such as outdated bank accounts, incorrect direct deposit information, or mailing address errors. These issues can be fixed by contacting the Social Security Administration directly. It is always better to check and update your information before the new payment cycle to avoid unnecessary delays. Survivor benefit recipients, including widows, widowers, and dependents who receive benefits based on a deceased worker's record, also receive the COLA adjustment. These increases help ensure that survivors are not left behind financially when living costs increase. This group often includes seniors living on fixed incomes, so even modest adjustments can help ease some of the pressure caused by rising costs. Tax rules related to Social Security benefits can also influence how much of the raise people actually keep. Federal taxes on Social Security benefits haven't changed in recent years, but some states treat Social Security income differently. A few states do not tax Social Security benefits at all, while others partially or fully tax them depending on income levels. Seniors who live in states with exemptions may keep more of their COLA increase, while those in states with taxes may see a smaller net amount after deductions. Because of this, financial advisors often recommend that retirees review their tax situations each year when COLA adjustments take effect. Even a small amount of planning can help people manage their income more effectively and make sure they are keeping as much of their benefits as possible. The COLA increase also has implications for Medicare recipients. Medicare Part B premiums are typically deducted from Social Security benefits. If premiums rise, they may absorb part of the COLA increase. For most beneficiaries, however, the increase still results in a higher net payment even after premiums are accounted for. Scammers often take advantage of times like this when people are expecting payment changes. Seniors are especially vulnerable to fraud attempts around the time COLA adjustments go into effect. Scammers may pose as Social Security officials, claiming they need to verify information to process the raise. It's important to remember that the Social Security Administration will never call, text, or email you to ask for personal information, your Social Security number, or your banking details. Any such contact should be ignored or reported immediately. Being aware of how COLA works can help beneficiaries avoid confusion and misinformation. There are no special application forms, no surprise checks, and no extra one-time payments tied to this adjustment. The only official way to receive the increase is through your regular Social Security payment, once it has been automatically adjusted by the SSA. For many Americans, this adjustment may not feel like a windfall, but it is an important safeguard against losing purchasing power. As the cost of living increases, even modest adjustments can help seniors and disabled individuals better manage their budgets. It allows them to maintain their standard of living without falling further behind. Recipients who want to make sure they receive their payments on time should confirm that their SSA account is active and up to date. This includes verifying their direct deposit details, contact information, and any other personal records that could affect payment delivery. Taking care of these details ahead of time can prevent unnecessary delays or confusion once the new payment cycle begins. Financial experts stress that understanding your benefits and how COLA works can make a real difference in personal financial stability. Many people don't check their statements carefully and may not even notice how much their benefits increase, but knowing the exact amount can help with budgeting for rent, food, medical costs, and other essentials. For some, this raise will cover the increased cost of medication or groceries. For others, it might help pay utility bills or other monthly expenses. It may not be a massive amount, but in a time when every dollar counts, the COLA increase plays an essential role in helping beneficiaries keep up with inflation. The Social Security Administration has emphasized how critical it is for beneficiaries to stay fully informed about their benefits, especially during periods of economic uncertainty. In 2025, this reminder carries even more weight. With rising costs putting pressure on household budgets, understanding how the cost of living adjustment, commonly known as COLA, works is more important than ever. The cost of living adjustment is not a bonus payment or extra benefit. Its primary purpose is to help protect Social Security benefits from losing value when prices increase. When everyday costs such as groceries, housing, transportation, or healthcare rise, a fixed monthly income can lose purchasing power over time. COLA helps offset some of those increases so that beneficiaries can better keep up with the cost of living. In recent years, inflation has remained a key economic issue. Prices for many basic needs have gradually increased, which is why COLA plays such an important role. It doesn't make anyone wealthier or guarantee financial comfort, but it does provide some level of protection to help people manage their essential expenses more effectively. October 2025 begins a new COLA cycle that will affect many beneficiaries. Each year, the Social Security Administration reviews inflation data and applies an adjustment to benefits if inflation has risen. This is designed to help monthly payments better reflect changes in the economy. For people who rely on these benefits, even a modest increase can help ease financial pressure. The Social Security Administration has emphasized how critical it is for beneficiaries to stay fully informed about their benefits, especially during periods of economic uncertainty. In 2025, this reminder carries even more weight. With rising costs putting pressure on household budgets, understanding how the cost of living adjustment, commonly known as COLA, works is more important than ever. The cost of living adjustment is not a bonus payment or extra benefit. Its primary purpose is to help protect Social Security benefits from losing value when prices increase. When everyday costs such as groceries, housing, transportation, or healthcare rise, a fixed monthly income can lose purchasing power over time. COLA helps offset some of those increases so that beneficiaries can better keep up with the cost of living. In recent years, inflation has remained a key economic issue. Prices for many basic needs have gradually increased, which is why COLA plays such an important role. It doesn't make anyone wealthier or guarantee financial comfort, but it does provide some level of protection to help people manage their essential expenses more effectively. October 2025 begins a new COLA cycle that will affect many beneficiaries. Each year, the Social Security Administration reviews inflation data and applies an adjustment to benefits if inflation has risen. This is designed to help monthly payments better reflect changes in the economy. For people who rely on these benefits, even a modest increase can help ease financial pressure. In the end, October is more than just another month on the calendar. It's a reminder that Social Security benefits are designed to keep pace with economic changes, helping millions of Americans maintain a basic level of stability and dignity in the face of rising costs.